Today I wanted to bring you guys back to Surfside. We were literally just here like maybe a week and a half ago on this same street, guys. And this house behind me that you guys are looking at almost completely burned down the other day. There was a fire started. You guys can see it's all black up there. One of my longtime fans and viewers, Jeannie, she sent me an article talking about this. And I guess the reason why this is significant is because Gisele Bündchen, the Brazilian supermodel, and Tom Brady's soon-to-be ex-wife, lives right on this street. I'm not going to show you guys which house it is. I know which house it is just to protect her privacy, but I guess that's why this whole thing kind of blew up and became a big thing for people to look at, is because of this house burning down basically on the same street. And I think it's kind of interesting, you know, before we get into the whole video topic, just walking through this neighborhood and knowing this area for a long time, it is a very nice neighborhood, don't get me wrong. Very low crime. You know, you don't see anybody suspicious walking down the streets here in this area. However, it is kind of strange when you think about it, when you have somebody like a big iconic person like Gisele choosing to live in a neighborhood like this with, like, you know, no gated property and not really any big time security. It'll be interesting to see now that this whole fire story is in the news, if she's going to stay in the area now that she's been outed and people know that she's here. So I didn't even know about this until Jeannie sent this to me. So I just think it's interesting when somebody of her status, you know, somebody that rich also would move to a relatively normal neighborhood like this and not like a super fancy community. Because I'm going to take you guys over to near Indian Creek Island, where her and Tom were building this mansion over there, or renovating it, whatever, getting ready to move in over there. It's where the ultra wealthy of Miami moved to, because I have a story about the island I want to share with you guys at the end of the video. So while we're walking over towards the Indian Creek Island, let's cover all of today's stories. The first thing is, institutional investors now are starting to unload a lot of their properties, and they're not doing this everywhere. Similarly to how the housing market is not suffering everywhere, they're not unloading properties everywhere either. But in areas across the country where institutional investors own the most real estate, these are areas that they're starting to pull out of. And these are areas like Tennessee, Mississippi, Arkansas, Jacksonville, Florida, Macon, Georgia, Atlanta, Georgia, Lakeland, Florida, Phoenix, Arizona, and Indianapolis. These are some of the top markets in the country where institutional investors have made the largest share of home purchases over the past couple years. And now they're starting to put the gears in reverse and start to unload a lot of these properties as rent prices are starting to drop, and they're not able to turn the profits anymore that they were hoping that they were able to, on top of the fact that many of these institutional investors paid too much for the property to begin with, and selling right now is one of their only ways to recoup some of their losses in the near term. One thing a lot of people need to understand is that these institutional investors, they come in with all cash, right? Everybody knows that they come in, they're all cash buyers, they make you a cash offer on your house, competitive offer, whatever. But one thing people don't understand is that cash is not theirs, guys. It's not like these guys are just loaded and have millions and millions of dollars for no reason. No, they get that money from venture capitalists. They borrow that money just like you and I do to buy a house. The only difference is, you know, they get a lot of that money up front, and what they're supposed to do with it is invest it in a way that they can make quick returns. So they saw the opportunity during this boom cycle with the housing market, figure, oh, let's jump on this bandwagon. Rent prices are going up, home prices are going up. You know, we can afford to pay more for these properties and still pay cash and kind of outbid a lot of normal home buyers, which is what they did. Well, now it's starting to backfire, because in these highly saturated markets where you have a lot of investors, because they all chose to invest in the same areas, they are now starting to compete with each other on the way back down. So now it's becoming more of like a race to the bottom, when you have a lot of institutional investors in one geographical area, it forces them to undercut each other. If you have one listing at $399, well, now the other one is forced to list at $390 or $385, and so down it goes, guys. So, and they need to repay these loans. That's the other thing. So they borrow all this money from venture capitalists, and they need to repay it because these guys invest with these institutional investors in hopes to receive a return, and they expect to get that money paid back and make a return on their money. So how are they going to do it? They need to sell these properties right now at hopefully a profit, or at the very minimum, no loss. So that's what they're looking to do right now, and it's one of the reasons why you're going to see a lot of houses come on the market in these cities and states that I just mentioned. And it's not just institutional investors who are in trouble either. Also, home builders are not feeling good about the future right now. Everybody's probably heard at this point that home builder sentiment is at the lowest levels that it's been in a long time. But there's more to it than that, because one thing that's happening, guys, is the sentiment is down because their sales are way down, and we're talking big time. So building permits, okay, fell 17% for Pulte Group, one of the home builders. Their cancellation rates for their contracts were about 15% in the second quarter of 2022, and now in the third quarter, 24% of their transactions are being canceled, guys. That is a lot. We're talking a quarter of all transactions being canceled as people can no longer get the financing that they were hoping to get, with mortgage interest rates continuing to rise. As I'm shooting this video today on Wednesday, they're going to be having another Fed meeting this week, and guess what? The interest rates are going to go up even further. That's pretty much a guarantee. So like I said way at the beginning of this year, that we could see 7 to 8% interest rates at the end of this year. It's happening, guys. Most people are looking at 7.3% right now after this rate hike. Most people probably going to be looking at somewhere in the 8s. That's my guess. And the year's not over yet. It's not really a surprise that we're seeing all these canceled contracts, because even if people want to move forward on these houses, a lot of times they just can't. They literally can't afford it no more. They're not going to be qualified to move forward on that transaction anymore. So that's one of the major problems with these cancellations. And one thing a lot of people don't realize is that these cancellations are not all voluntary. Some of them might be because people are scared, or they look at the market going down and they think they can get a better deal, which is probably a legitimate thing if you're seeing a lot of new listings come up in your area. But sometimes it's just involuntary. People cannot afford to pay an additional $400 a month for the mortgage when you were already stretching it before. And so if we look back during the last housing crash, single family home starts fell 80% from January 2006 through March 2009. So that's a little over 3 years, guys. That's pretty spread out. Well, we're talking just 3 months here, and things are already down 15% when it comes to these home starts. So imagine if things keep going down at this rate, no one's going to be building any houses in 3 years from now. That's kind of one thing to worry about. And one of these guys from the home building companies, listen to what his quote was. He said, "I think we're seeing the most abrupt change in the market in my career. And I've been around for a long time. I've seen sales just turn off, which for us happened in May." So that is significant. And what he's saying is 6 months ago, single family home starts were still up 10%. Fast forward to today, guys, in November, now it's down by 19%. And he's saying that to go from 10% to 19% in this short period of time is a historically sharp turn when it comes to the amount of new home starts being built right now. So that's something that should make everybody a little bit concerned, because this is going to be a problem for people who are looking for a new house in the future as well, because obviously a lot of areas do need a lot of new housing. And of course, right now, this could put a downward pressure on the housing market. But as things start to recover, interest rates go back to a lower rate, or maybe they stay the same or high like they are now, but prices start to go down, people are going to start going back into the market looking for deals and hoping to buy. And you know, all the pent-up demand for people that want to buy right now but can't afford it could end up just driving the prices right back up again within a matter of a year once things become somewhat affordable. So anytime they say they're not going to be building and the housing starts are down, it's not really a good thing. It means that prices are going to stay high in the future. But I think that we're still going to see this correction or crash, whatever you want to call it, in the near term, because all of the steps have been put into motion already for this to happen. So at this point, it's basically unstoppable. You know, it can't be reversed right now. The only thing that could reverse this crash or the correction from coming is if the Fed just turn the money printer back on, start sending out the stimulus checks again, and completely destroy the US dollar. That's the only way that it can keep going pretty much overnight. Otherwise, we need to follow through with this downturn, and this is what we can expect in the near term. This home builder thinks that next year, brand new homes could be 20% off, guys. And that lines right up with my prediction that I told you guys last time we're actually here in Surfside when I shot the housing market prediction video. So he's saying prices will be down 20% in a year from now. I totally agree. It could actually end up being more, especially as the recession is just starting to ramp up and, you know, the layoffs keep coming essentially. And another thing that we can look at that is basically a huge sign that the housing market is slowing down as well is HELOC loans, guys. Right now, Chase Bank just announced that they're not approving or taking any new applications for HELOC loans right now, which is kind of funny because a few months ago, that was still all the rage. You know, there was still a lot of incentive, a lot of promotions for people to go out and get that home equity line of credit because, you know, home equity and housing prices are at an all-time high, and this is a great thing to do to have extra cash on hand, blah, 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 blah. Well, fast forward to today, Chase is no longer accepting new applications for home equity lines of credit. And on top of that, if you do have a home equity line of credit right now, you could easily be losing that home equity line of credit as more banks starting to tighten up on the lending, and they can call that in anytime they want and close that account if they feel like it, guys. We already talked about this a lot in the past on how dangerous these HELOC loans can be if you don't know what you're doing with it. So in some ways this is good. It's good that they're tightening up the lending and not giving these to people anymore, because they know that home prices are starting to go down and they don't want to be on the losing end of this deal, which is where they'll be if they keep giving these loans. So if the banks are saying no more home equity lines of credit, guys, that should be a huge warning sign that the party's over. This over here is Indian Creek Island, and this is the place I was referring to in the beginning of the video where Tom and Giselle were remodeling a big mansion over there. This is all a private gated community, and it has a seawall across the entire island. And I just read a news story today talking about how they're going to be redeveloping the seawall on this island, and because people here are so rich, they're going to be looking at a different type of concrete technique in order to avoid corrosion. Because like we looked at in the last condo video, you know, they evacuated that condo down the street where I used to live. And why do these places have problems? Because of the rebar. Once water gets into the concrete and starts rusting out the rebar, it starts breaking up the concrete and makes everything completely unstable. Well, now this place, because they need to redo the entire seawall anyways, and everybody here is loaded, they're going to be redoing the concrete with basalt rebar. And basalt is actually a mineral, it's not a metal, so it doesn't rust. And it's actually a volcanic rock that they're going to be using to reinforce the concrete seawalls here. And it's obviously a lot more expensive to do this. And now that this is becoming like maybe the new way to use concrete in the future to avoid corrosion, especially in areas like this where we're surrounded by salt water, this could end up being just another thing that divides the rich and the poor, because it's so much more expensive to do this and rebar is readily available and the basalt rebar is not. So you're gonna have rich communities like this able to probably withstand, and when it's time to do these concrete repairs in these newer buildings, they'll probably be able to do things like the basalt rebar concrete repairs and things like this, or whatever new technologies they come out with in the future, versus using the old school rebar where the concrete is good for like 20 years and then the rebar will start rusting out and start causing spalling and all these problems. And that's why you see all the high rises and stuff here in Florida, they need to go through what's called concrete restoration every 20 or 30 years, because the way that it's built, it's all built with that old school rebar that is just starting to deteriorate the buildings over time, and they need to be maintained in order to keep the buildings safe. There's so many things in the world that money can buy, and even when it comes to construction quality and being able to feel safe and actually be safe where you live, money now is one of those factors. You know, if you want to live in a safe area, you have to have money, guys. It's kind of sad, really. It's just yet another thing that separates the rich and the poor now. And speaking of separating the rich and the poor, one thing that is really worrisome right now is since 2001, median rent prices, including utilities, have increased by about 18%. And the household income for renters, when adjusted for inflation during this time period, has only gone up 3.2%. And when we look at this 20-year span of time, and people's wages are only going up 3%, but housing costs up 18%, that's a 15% difference, guys. You know, where are people going to make up this difference in income in order to pay the rents? You know, it's bad enough, you know, with homeowners looking to get into a property and paying these crazy interest rates, but in some ways, renters are even more screwed, because renters tend to be lower income, at least a lot of times. That's not always the case, but they tend to be lower income and cannot afford these type of increases. And of course the government right away, they say, well, we need to expand the Section 8 program and try to make Section 8 payments more enticing to owners. So their answer is always, let's just give money to the people that need it, just like they did during the pandemic. And we see how well that worked out, which it didn't work out well at all. And the worst part is, not only does giving money to people who need it not really work, but it doesn't fix the underlying problem, which is that inflation is causing everything to go up, and it's not fixing the problem that, you know, we need to have more supply of housing in order for prices to be more stable, which is coming to the rental market. We just talked about that a few days ago. So this year alone, we're getting like 420,000 new rental units. So that's great news. But the other thing is, when we're talking about Section 8, a lot of landlords don't want to take Section 8 payments, guys, or tenants, because, you know, there's pros and cons to it. On the one hand, Section 8 payments are guaranteed by the government, and at least as the landlord, you know you're going to receive that payment every single month. But it comes with a lot of red tape when it comes to getting the unit prepared to rent to a Section 8 tenant. There's a lot of extra paperwork involved besides just writing up an extra lease. And on top of that, from my personal experience as a real estate agent, and from what I've heard from my investor clients in the past, Section 8 tenants tend to just destroy the units. And the main reason for that is because they're not paying the majority of the bill. They pay a percentage of it, but it's a small percentage, guys. And so they don't really have the incentive to keep the place nice and tidy, because the pride of ownership or the pride of the living situation is just not there. It's something that's being handed to someone, and just like if you have a spoiled, rotten kid and you give them a brand new car, their likelihood of crashing that car in the first 6 months is pretty high compared to the kid that had to work a part-time job for 2 years after school and bought a used car and takes care of that thing like it's his baby. So that's the difference we're talking about here between regular tenants and Section 8 tenants. Like here in Miami, for example, our real estate brokerage that I'm with, Beachfront Realty, they send out memos every once in a while saying, listen guys, if you represent a landlord, you can't discriminate against taking a tenant just because they have a Section 8 voucher. So it's pretty crazy because the law is on the side of people that have the Section 8 vouchers, and you can't discriminate against people because of that, but they're allowed to go in there and destroy your property, and you just have to eat it, essentially, because a 1 month security deposit is usually not going to be enough to cover the damages that's going to be caused by having one of these tenants. So the reason I want to bring this up is because, yes, there is a huge divide between the wages going up for renters and how much rent costs now, but I don't believe that giving people Section 8 vouchers is going to be the answer to this problem. The answer is always the same, guys. When prices are too high, we need to either lower demand or increase supply, or a combination of both. That's the only way to equilibrium. Not government handouts, not forcing people to take Section 8 tenants, none of that crap. So that's the real answer to all of this, and I hope that over the next couple of years we still continue to see a lot of multifamily rental units hit the market, as home builders know that there's a big demand for this right now. And so hopefully they're going to continue to build this over the next couple of years, even if we're in a recession, because they know that that'll be a hot ticket item over the next couple of years, as people just can't afford to buy at these prices and rates, or may choose to rent in order to wait out the housing market crash or correction, whatever you want to call it. If you guys enjoyed this video, hit the bell notification down below. That way YouTube will always alert you when I put out a new upload. If you don't want to wait for the next one, check out this one on the screen right over here, and I'll see you in the next one.